Hello everyone, welcome to the YouTube channel of BeingACCA. This is Tushita Gupta, ACCA affiliate, and in this video we are going to be finishing the topic of working capital management. We are doing the last two questions in this topic, which is Grumpy Company and Amax Company. Let's begin with Grumpy Company. A Grumpy Company sells stress-relieving toys and surprisingly perhaps is happy with the progress it is making financially as it is growing and is profitable. There are issues, however, about cash flow. An extract from the accounting records for the most recent financial period, a year, is as follows. Okay, so we have the accounting extracts. In one typical cycle of trade, cycle X, goods were ordered on 17 January 15 and delivered 21 days later. The supplier was paid on 25 February. The goods remained in inventory for 62 days, at which point these goods were sold on credit terms of 60 days. Grumpy was eventually paid 68 days after the sale was made. Assume there are 365 days in the year. Okay, so let's solve the first question. What is the accounts receivable collection period from the table data? So this is our table data. This is our first question. Our receivables collection period formula I'm writing over here. It is trade receivables divided by the credit sales. So just going to, and this is multiplied by 365 to convert it into the number of days, right? So trade receivables are given to us as 85,000 right over here, and dividing this by credit sales, which are given to be 480,000, and then multiplying this by 365. So we get our answer as 65 days, which will be option B. Moving on to the next question. What is the accounts payable payment period from the table data? Okay, so we want the payable period now. Now the formula for payable period is trade payables divided by credit purchases. And this entire thing is multiplied by 365 to find out the number of days. So this is what is the figure for trade payables? We have trade payables of 30,000 and we divide that by credit purchases, which are 212,000 multiplied by 365. These are very simple questions, aren't they? So this will be 52 days because we want to give to the nearest number of days. So we'll write 52 over here. Excuse me for this because I do not have my pen at the moment. So this will be 52. Moving to the next one, we have what is the inventory holding period at the year end? Okay, now we want the inventory holding period. Right. So what is the formula for the inventory holding period? It is your closing inventory dividing by cost of sales, and this entire figure is multiplied by 365 to have the number of days. So the closing inventory, do we have the closing inventory at the end of the year? Yes, this is 52,000 and dividing this by the cost of sales. So I think we will have to calculate our cost of sales for that. So how do we calculate that? This will be, so the formula for cost of sales is, okay, let's calculate it separately. Cost of sales. If you remember the formula for calculating cost of sales, it is actually the opening inventory, which is 45,000, plus your purchases, which are credit purchases of 212,000 plus cash purchases of 21,000, and subtract your closing inventory, which is 52,000. So this is how I have my cost of sales. So I'm just going to divide the closing inventory by my cost of sales and then multiply it by 365 to have my number of days for inventory. This comes out to be 83, which is 83.98, which will be rounded to 84 days, which is option B. Moving to the D question, for cycle X, what is the cash operating cycle? So we want our cash operating cycle right over here. Okay. So where does our cash operating cycle start? It starts when we pay the supplier. So this cycle will start on 25 to 15. So this is where it's going to start, and the cycle is ending when we are receiving the payment. So the goods remained in inventory for 62 days. So and these were delivered 21 days after the order on 7th of February. So this will come out to be if I find out the goods were sold 62 days later. So this will get us to 10/4/2015, 62 days later after the date of receiving the order. This converted it into, okay, so let me try this, right? Still doesn't work. So what I'm going to do is, right, so this is what the date that I get, and then whoever we sold this to, they took 68 days to make the payment. So I will calculate 68 days after which after from this date. So if I do the calculations, this will bring me to 17th of June 2015, and if I calculate the number of days from this date till this date, this will come out to be this will come out to be 112. So these are 112 days. Now there is another method to calculate the same. We have the formula for calculating the cash operating cycle, right? So first we take the payables payment period. So from we receive the delivery from supplier after 21 days from this date, and we had paid the supplier on 25/2. So we after receiving the delivery, so let's calculate 21 days from 17th. So this is the another method. Method 2. First we calculate 21 days from 17/1/15. So this will come out to be 21 days from 17/1/15 will come out to be 7th of February 15, right? So after this we have our payables payment period. We paid the supplier on 25/2. So we paid them on 25/2/15. Okay. So how many days are between 25 and 7? We have 18 days. So that means 18 days is our payment to the supplier. And then we have, we will add the holding period. Now inventory holding period is 62 days. So we add this. And then how much is our receivables collection period? We have 68 days after which the payment was given to us. And then so to find out how much is our cash operating cycle, what we'll do is we'll add the inventory holding period, we'll add the receivables period, and then we'll subtract the payables period, and this will give us 112 days again. So whichever method you use, the answer remains the same because the concept fundamentally is cash operating cycle. Now moving to the last question, indicate by clicking in the relevant boxes whether the following statements about a cash operating cycle are true or false. A long cash operating cycle is more serious in a period of strong growth. Yes, this is true because whenever businesses are over trading, they will have a longer operating cycle because they will keep on aggressively making sales without caring whether how much time their receivables are taken to make the payment. So yeah, this is a serious concern in the time of strong growth. So this is true. Operating cycles tend to be longer in brand new businesses compared to established businesses. Now, this statement is also true because when you are a new business, you will also, find it difficult to get credit from suppliers because you are new in the market, and suppliers will take time to trust you and give you more credit. So yes, the operating cycle in new businesses compared to established businesses would be longer because established businesses are already in the business for long, and they have their suppliers who have probably long relations with them, and they trust them, and they give more credits, so their operating cycles tend to be shorter, and for new businesses their operating cycles will tend to be longer. So this is also true. Okay, let's continue with the second question. Amax Company is a multinational company which has been reviewing its working capital management. We have the details of inventory and trade payables given to us. Amax Company has received an offer of a discount for bulk purchase from Bard Company, one of its major suppliers. Bard Company has offered a 0.5% discount on orders of 60,000 units or more of component X. Amax Company currently consumes 240,000 units of component X each year and places orders of 20,000 units at the end of each month. Holding cost for component X is $1 per unit per year, and ordering costs are $250 per order. Amax Company does not maintain any buffer inventory of component X. Colex Company, a major supplier of component M to Amax Company, has offered a 1% early settlement discount for payment within 30 days. Amax Company currently takes 72 days to settle outstanding invoices with Colex Company. Amax Company has a cost of short-term finance of 6% through an overdraft and no surplus cash. Assume that there are 360 days in each year. Amax Company currently has decentralized treasury operations but is considering implementing a centralized treasury department. Now the first question wants us, using months as a basis, what is the financial consequence of accepting the bulk purchase discount? Okay, so let's solve this. Amax Company, this is the first question. We need to find out the financial consequence of accepting the bulk discount. So for this, we will find out how much our total annual inventory costs are before the discount and after discount, so that we can find out if we are taking any benefit from this. Before discount and after discount. So what are the components of total inventory cost? The first is purchase cost, then I have my ordering costs, and then I have my holding cost, right? And this will give me my total inventory cost. Right, so for my purchase cost, I am purchasing 240,000 units at the price of 25 per unit, and then I am getting for ordering, I am having 240,000 units and then 20,000 in one order, and multiplying this by the cost per order, which is 250. Then my holding is $1 per unit per year, and then I have my average inventory will be 20,000 divided by 2, which is the the units we order in per order divided by 2. So the sum of this is my total inventory cost before I take any discount. Now let's find out how much would it be if we take the discount. So this will be we are again buying 240,000 units. This remains same, 25, and now we are getting a discount of 0.5%. So we are only paying 99.5%. After this, we have our ordering cost. Ordering cost will be 240,000 divided by, now we'll be ordering 60,000 units at once. So this divided by 60,000 and then we multiply it by cost per order. This is our ordering cost now. So for holding, this is $1 and our average inventory would be 60,000 divided by 2. So 60,000 divided by 2. Right. So summing this up will give me my annual inventory cost after the discount. Now let's see, are we saving anything? Earlier we were spending this much, now we are spending this much. Did I forget a zero over here? Yes, I did. Okay, so this is the best part about Excel. I have a benefit of 12,000. So my option B is the correct answer. Moving to the second one, using days as a basis, what is the financial consequence of accepting the early settlement discount? Now this pertains to colleagues, right? So they have offered 1% early settlement discount. Trade payable in respect of colleagues is trade payable in respect of colleagues, we have 3,200,000, right? And it says that currently our settlement period is 72 days. So let me find out how much is our total credit purchases from this person. So credit purchases, remember how we used to calculate the settlement period? We find that out by dividing the trade payables by the credit purchases and multiplying them by 360. So 360 is the number of days that we have over here. Transposing, I will find out the credit purchases. So this will be this figure divided by 72 and then multiplied by 360. I will find my credit purchases. Now we are being offered a 1% early settlement discount. So let's see the benefit from 1% discount. So this will be 1% of this figure, right? So we have our benefit from the 1% discount. Now let's see how much is our current cost of financing. Current cost is it is written over here that our cost of capital is 6%. So 6% of how much would we take over here? We will take 6% of the trade payables, because since we are delaying this much amount of money to this supplier, we are not having to pay the overdraft cost of 6%. We are saving on this cost. So this is the amount that we are saving right now. Okay, so if we accept the discount, what will be our new payables balance? Our new payables balance, if discount is accepted, so currently we were taking 72 days, now we will be taking only 30 days. So what will be my new payables? This will be the total trade payables, multiplying this by 30 and then dividing this by 72. So 30 by 72, this will be my new payables balance. And let's see how much we are saving now. Saving now will be 6% of this figure. So we will be saving 80,000. So earlier we were saving this much. Current, this were the saving. And now we are saving only this much. So we have lost some saving. How much we have lost? We were earlier saving this much, now we'll only be saving this much. So this is our lost saving. So now let's see how much were we benefiting. We were benefiting 160,000 and now this is the lost saving. So if we net this out, this was the additional benefit from this discount and this is something that we are losing. So if we net this out, we are still having a benefit of $48,000 per year. So yes, this is a good deal. We should accept this discount from them. Now let's go to the C question, in relation to managing foreign accounts receivable, which of the following statements is correct? Companies expecting to receive foreign currency from foreign accounts will be concerned about the risk of the foreign currency appreciating against the domestic currency. Now, this is incorrect because if I am expecting to receive foreign currency, then I will be concerned about the risk of the foreign currency depreciating, because if it depreciates against the domestic currency, I will be, worse off. So I will not wish for this. This statement is wrong. Moving to the second one, the safest way to conduct business with foreign accounts receivable is by making a sale where goods are shipped and delivered before payment is due, open account. No, this is not correct, because if they ship before receiving the payment, there is a risk that they might not receive the payment at all. So they will be incurring losses. So this is also incorrect. Moving to the C statement, there is no need to assess the credit worthiness of foreign customers if a company has export credit insurance for foreign accounts receivable. Now this is also incorrect, because even if they have insurance, they may not cover the entire debt. So maybe only some part of it you will get, and the other part you will incur a loss. So assessing the credit worthiness of the foreign customers is very important, because if you assess the credit worthiness correctly, then you will be able to minimize your default losses. Moving to the last one, discounting bills of exchange can reduce foreign accounts receivable default risk. Now this is correct, because discounting these bills of exchange will help you reduce the FAR default risk, because the level of investment in FAR is decreased. So yes, this is the right statement. Moving to the fourth question, in relation to Amax company's proposed change to treasury management operations, which of the following statements is correct? Now see, local management will be incentivized to maximize productivity. If currently they are operating decentralized, now they will have centralized. So local management will be incentivized to maximize profitability. Now, this statement is not correct, because the local management would rather be less incentivized to maximize profitability, because they will have a lesser control on it. Since it will be centralized, their control will be lesser. So that is why they will be less incentivized. Okay, so this statement is wrong. Moving to the next one, Amax company will be more responsive to localized needs for currency hedging. Now, this statement is also incorrect, because centralized treasury management will rather be less responsive, because they will be, working on the work of all the units at once. So for local needs, they might delay. So this is also wrong. Moving to the C statement, Amax company will suffer a loss of autonomy at local level. Now this statement is correct, because they will have lesser, the individual departments at the local level will have lesser power, because the treasury management will be centralized. It will be at one center where all decisions will be taken. So this is correct. Let's read the D statement. The change should increase the cost of hedging foreign currency risk for Amax company. Now this is wrong, because if there are centralized treasury management operations, they have all finances in one place. They would rather be able to decrease the cost of hedging, because they will be able to negotiate bulk discounts and higher returns on investment due to higher investments. So let's go to the last question. In relation to working capital funding strategy, which of the following statements is correct? Statement A says an aggressive strategy seeks to maximize liquidity at the expense of profitability. Now, this statement is wrong, because an aggressive strategy aims to maximize profitability, even though it does not consider how much risky would that be. They just want to maximize the profits. So statement A is wrong. Let's read the statement B. Short-term finance has a higher cost than long-term finance. Now this is also false, because short-term finance is generally cheaper. This is common sense, right? So if you are going to get your money back in a relatively shorter amount of time, there is less risk. So the cost of short-term finance is relatively lower. Moving to the C statement, fluctuating current assets should be financed from a short-term source. Now this is correct, because fluctuating assets are the short term assets, and they should be matched with the short term finances. So this will be the efficient method of funding them. So yeah, this is correct. Moving on to the D statement, a moderate or matching strategy finances current assets from a short term source. Now this statement is wrong, because if we are using the moderate or matching strategy, this will use the matching principle. So some current assets may be permanently there, maybe like your buffer inventory, so they will be financed with the long term funding instead of the short term funding, because they are permanently over there. So D is also wrong. With this, we have come to an end of this question and also the topic of working capital management. In the following videos, we will be discussing the questions on investment appraisal, which is the next topic. Thank you so much for watching.